Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. The supermassive black hole means that this beautiful technical chart of global liquidity means we're about to start the next leg of liquidity, which we talked about before. The next leg of liquidity is the driver that will continue the next leg of this market. And when those factors come together, technological adoption, people investing in the space, liquidity starts flowing, you get the banana zone. The bull market for 2024 and 2025 is in full swing. Bitcoin, the leading crypto asset, has surged approximately 143% year over year, inching closer to its previous peak of $69,000. However, the current all-time high of $73,500 remains unattained, slightly dampening market sentiments. Nevertheless, one notable investor, Raoul Pal, founder and CEO of Real Vision, remains staunchly optimistic about the ongoing bull market. Powell anticipates the arrival of the banana zone, a phase characterized by frenzied and parabolic price surges typical in every crypto bull market. He suggests that this much-awaited phase might be imminent, possibly just weeks away. Once it commences, Powell predicts that crypto asset prices will skyrocket so dramatically and suddenly that keeping pace with developments will be nearly impossible. Furthermore, Powell forecasts that the overall crypto market cap will quadruple before the cycle concludes in 2025, soaring from the current $2.2 trillion to $10 to $15 trillion. Providing unique insights into the evolution of the banana zone, global liquidity conditions, and the cryptocurrency market, Powell underscores the alignment of the business cycle. Dealing with the technology adoption, it's the fastest pace of adoption of any technology. AI is not investable right now, and it's been growing at twice the speed of the internet. If we assume that it grows at the speed of the internet, which would be probably a false assumption, it should grow faster for the rest of this year or so, we get to the end of 25 with 1.1 billion active wallets. Active wallets are not actual users because people have multiple wallets, much like people have multiple IP addresses, which is what this is. That's a huge number, and that drives the adoption of the space based on Metcalfe's law and the valuation. Then if we extrapolate out into the future, I keep saying this space is going, this is the biggest macro opportunity we have ever been given. It's been the best macro-performing asset of all time. It's the best risk-adjusted reward of any asset in all history. It's an alien asset class. That trend of $2.5 trillion today to $10 to $15 cycle to $100 trillion by about 2032 is driven by this adoption curve. That's when you get to $4 billion active wallets by the end of 2030. That's a mega trend. That's all you need to know. 2.5 trillion, $10 to 15 trillion, $100 trillion. You're trying to capture that. You're trying not to F this up because this is the gift you've all been given, and everybody can put 10% of their wages in or whatever it may be because it's a democratized, fractionized asset that's globally homogeneous. Everybody in the world invests in the same product. Bitcoin is the same in Nigeria as it is in Brazil, as it is in the Cayman Islands. That is the gift to humanity. We get to invest in the infrastructure layer, the network layer of this incredible new technology, and on top, they'll build the applications layer, which would be the new Googles and Facebooks of this world. That's what's driving this trend, the debasement of currency plus the ridiculous adoption of this technology, which is only growing. You hear every institution now saying, well, we want to build real-world assets on Bitcoin rails. The exchanges are going to build on it. The corporations are going to build on it. We're already seeing so many people building on top of these rails because it's just a better system. Then we've got digital ID layer. We've got the stable coins layer. We've got so many things being built. That's going to keep driving this logarithmic chart, which gets us to the end of this cycle. We don't know, but Bitcoin, according to our work, could get to 400,000, could even go higher than that. Sure, it could be truncated too, but it doesn't matter because the trend goes longer. Your game is to stay in the trend. Even if you take some lifestyle chips off, let's say at the end of this year, just so you take economic pressure off yourself, it allows you to continue to participate in this trend. Because if you don't, you try and get cute and try and time it, you'll F this thing up. My job here is trying to un-F your future. You can understand where I get these little memetics from. How to un-F your future. You're being debased upon. Here is your answer. Don't F this up is don't miss out on this trend. The crypto supermassive black hole, as I'm about to explain to you, means that really there's only one asset that matters, and then we'll come on to the final one, which is the banana zone that you all love. So again, we go back to the total liquidity chart. This is how you are being FED. this is what you need to UNF yourself from, is the debasement of currency. Crypto is giving you that. It's also that tech adoption, and it's your route out. So at Xpan, we built up this table that I put on Twitter. I put it on every month, but look, it's a noisy table. But what it's showing, if you go to the bottom of this, the light blues are that each year from 2011, crypto is the best performing asset 3 years out of 4. In the 4th year, it's the worst. So macro winter, it's a terrible asset. Well, terrible asset, the lows are always higher than the previous lows. It's in a secular trend. You don't even need to worry about it. If you just own it, you just. But then when you put that together, even with the numerous 85% pullbacks, Bitcoin's done 20 million % returns. ETH, which started later in 2016, has done 324,000% returns, and Solana has done 8,300% returns since 2021. When you look at the annualized performance, Bitcoin's 139% a year, ETH 146%, Solana 203%. Then we go down to the next best performing asset, technology. This is the NASDAQ, not the exponential age basket that we built in Promocro, GMI, and the exponentialist different variations of it. This is just the NASDAQ. It's some 17% returns. So the NASDAQ has managed to outperform the Fed balance sheet, the global liquidity plus inflation by a few percent, actually by 5% a year. That's okay. Nothing else. No other asset has outperformed the debasement of currency plus inflation. Not one. The SP roughly keeps you flat. Everything else, your future self is poorer from owning it. This is profound in your understanding of asset allocation. Once you realize this, you realize you're wasting your time trading other stuff. You really are, because you are not going to compound the returns that you need for your future vision of yourself to be wealthier. So let's take NASDAQ, which is the best performing equity market in the world, bar none, over the last decade, and we look at it versus Bitcoin. It's down 99.92%. Get your fucking heads around that. That's the difference between the next best asset beyond NASDAQ. It's alien. This is the biggest macro trend of all time. It's so powerful that anytime you take money out of crypto and put it into anything else, you're going to lose money. Therefore, the only thing you can take crypto money out of is lifestyle, because lifestyle is priceless. Everything else is priced on a relative basis, and what you find is everything goes down. It's why a lot of people in crypto hold out to buy property until they're ready to, because property gets cheaper if your black hole means that this beautiful technical chart of global liquidity means we're about to start the next leg of liquidity, which we talked about before. The next leg of liquidity is the driver that will continue the next leg of this market. And the central banks are showing that liquidity is coming because then cutting rates says, hey, we're ready for liquidity to come. Remember, the reverse happens in crypto winter and macro winter. They start hiking rates and start withdrawing liquidity. Here they're increasing liquidity and cutting rates because they want stimulus. That is your friend, your biggest friend, and when those factors come together, technological adoption, people investing in the space, liquidity starts flowing, you get the banana zone. And the banana zone is just all of these factors coming together for macro summer and macro winter. That's what lies ahead as far as we can see.